and you must take advantage of them. You don't have to show your birth certificate or birth certificate, if you prefer, for the old age relief. You don't have to do it. In the year in which you attain that age, you can begin to take it, right? And it's the same thing with the pension relief. Because you used to have to apply, now thank God that is gone. Okay. What is an IRA? Right? Or the persons who are not in a superannuation scheme. They're persons who are not employed, etc. Now I cut it short by saying these approved retirement schemes, and basically Scotia Bridge falls into that, and with a number of other entities. And you can only get approval by, they have to review the rules. The main purpose is the scheme is to provide retirement benefits, right? And the lump sum has the same actuarial formula as the other, as the superannuation scheme, right? And finally, the taxpayer audit has to approve it, as well as the FSC. FSC first, tax administration. And in that approval, they request information to show that trustees won't benefit, the administrator won't benefit too much. The tax people can withdraw the approval or can qualify it according to what they recommend. Self-employed person. Now, prior to this, in 2010, I think, early, just 2 years ago, all you could deduct was $6,000 tax-free. And that went on for many, many years. And we fought to change it. Now it is, you can deduct 80% of your statutory income. 20% of your statutory income. That goes tax-free. All you used to be able to do is $6,000, and that went on for 25, 30 years. And now we have gotten some relief. And you're over 65, you will also get the $80,000 for each age relief and the threshold. And I have put two little complications there. And I want you to look at them. Self-employed income, 4.5 million. Less NIS, 50,000. Less income tax threshold, we're at that point? Yes. 441.16. Less age relief, 80,000. Income taxable, liable to tax, it should have been 3.9 million. The income tax is 982,208. Now, when you contribute to a retirement scheme approved, you are entitled to 20% of your chargeable income. Look at the next slide. The same figures, right? But you are able to contribute 900,000, right? 20% of that income to a retirement scheme. And your tax saving is $225,000 for the year. Don't forget, you have saved 900,000 with the approved entity. You're going to earn interest on it, etc. So you need to get on with getting, if you have that kind of income, you're still working. And I'll talk about still working in retirement. And then I said that the average age for the schemes is 68, but Scotia Bridge has 69. Now you're 69 years of age and over. What are your benefits? What can you invest? Program at UWI. And she told me to go into Scotia Insurance. And I put in a mere $20,000. And she, I don't know if she's still there or whatever, but I'm very glad I didn't follow up because I'm in Scotia Bridge. So I just left it there. And this week I got the most wonderful surprise of my life. My $20,000 had grown to $570,000. So I immediately called down to our payroll department, wrote them a note and said, take out $30,000 out of my pay every month and send it to Scotia Insurance. I was so wonderfully surprised, right, at that, right? And you heard the statistics of the percentage that they now have. One should never scoff at the National Insurance Scheme, introduced in 1965, a funded social security system administered by the Ministry of Labor, almost bankrupt, but nevertheless, contributors are employed, persons, they're still paying people who are 65, and so they're still able to pay them, thank God. Despite the fact that monies have been taken out for small business and such delight. Within 3 years of your retirement, or you lose part of it. Right? So in other words, if you're retired, say in 2010, you must apply for it by 2030. Right? If you apply for it in 2014, you lose 2010. But they only go back 3 years. Right? But don't scoff at it, it has some benefits. Old age benefit, which is the monthly payment, invalid, widows and widowers, orphans benefit, children's benefit, if it's a disabled child, injury or disease. But most important is the funeral grant. And I must tell you that they are very, very, very good at giving the funeral grant before the person has decomposed. With pressure, and you get Miss Riley and Mr. Thorpe, you will get it in time for the funeral. Right? And many people that I see in this room, two in particular of my friends, well, Mr. Martin, don't reach that stage that he's still battling with the ministry. But if you have time, I have become interested due to, mainly because I was asked to be on the academic committee of the learning of the staff. But I've taken an interest because of that in the staff exchange. If you are retired and you are at home, go down to the stock exchange and sit down and learn the process. Learn the process. Why am I telling you this? Benefits to be gained that are tax-free. The transfer tax is relieved on when you sell stocks and shares that are traded, and the dividends that are paid are tax-free. And thirdly, you have a new element of the stock exchange which must be carefully monitored because it has good benefits. It's a junior stock exchange. So if you are like some of my friends over there that have retired and are sitting home, although they have Lions Club and whatever, they must take a walk down to the stock exchange, look at the trading, keep on top of the stock, see what is this. Because don't depend on your broker alone. Learn the system because there are many tax-free benefits to be obtained. I will give this presentation electronically.